Multichoice has rejected a buyout offer from Canal Plus. The DSTV operator says the suggested offer price of R105 per share significantly undervalues the group and its future prospects. But the door has been left open for future engagement should Canal Plus decide to sweeten its offer price. The current offer price is a 40% premium on Multichoice's closing price on the 31st of January. But Multichoice says it's rebuffed the current proposal after careful consideration and its own valuation exercise. Meanwhile, Canal Plus has since beefed up its shareholding in Multichoice to 35% from about 32% last week. Vukile expects to hit the lights out when it presents its annual results. The retail-focused real estate investment trust says it will outperform the upper end of its upgraded dividend guidance. That growth target was set at 8 to 10%. That outlook accompanied a trading update from Vukile. The firm says its South African and Spanish retail property portfolios delivered impressive increases in performance in November and December, signaling a successful Black Friday and holiday trading period. RCL Foods has flagged a profit bump. The firm expects its headline earnings per share to increase by at least 30%. It cited an improvement at Rainbow, which provides a range of fresh and frozen chicken products, and says that division managed to deliver despite the negative impact of bird flu in the current period due to a turnaround plan on that end. RCL's also pointed to a solid showing by its sugar unit, which was supported by higher market prices. Italtal has forecast lower half-year profit. SA's biggest retailer and manufacturer of tiles, bathroomware and related products says its headline earnings per share could register a decrease of up to 17%. It has not elaborated on what's driven that decline, but more details will be shared when it releases its results later this month. Private sector activity has picked up slightly. S&P's global PMI for the country edged up to 49.2 from 49 previously. The print remains in contractionary territory as it's below the 50-point neutral mark, indicating a slight decline in the private sector's performance for the second month running. S&P Global's David Owen says SA businesses remain beset by demand and supply side challenges at the beginning of 2024. Notably, the Durban port crisis and its impact on delivery times and output capacity. Mining output fell to 1.1 trillion rand in 2023. That's according to the Minerals Council SA. The industry body says the decline was due to weaker commodity prices and logistics constraints, which curtailed exports. The coal sector was hardest hit as prices were down 55% in 2023 from the highs the year before. Looking ahead, Council CEO Mzila Mtenjane says he is cautiously optimistic about the year ahead. The German government and a number of EU members are at loggerheads. That's as German liberals are planning to pull the plug on a supply chain law. Here's our reporter Ndaleng Lachela with more.
That's right, Zinati. The future of an EU supply chain law, which would punish European firms for human rights and environmental violations, is in doubt because it doesn't have the support of the German government. And joining us now with more is DW correspondent Chiponda Chimbelu in Berlin. Thanks for your time today. Now, Chiponda, why is Germany opposed to the law?
Thanks for having me. Well, one of the reasons the German government is opposed to this EU law is because of a disagreement within the ruling coalition. While the Social Democrats support it, one of their coalition partners, the Free Democrats, do not. Now, they say that the EU law would hurt German businesses. Now, Germany, of course, has a supply chain law, but the EU law would go further than the German one. It would mean that more companies would have to adhere to the supply chain rules, including firms with fewer than 1,000 employees. So far, those firms have been excluded from Germany's supply chain law. Now, critics of the EU law within the German government say that many smaller and medium-sized companies do not have the necessary personnel and financial resources to deal with the EU law.
What's at stake if the German government votes against the EU supply chain law?
Well, this is a law that is about human rights, environmental protection, and the responsibility that European businesses have outside the bloc. The goal of the EU supply chain law is to compel businesses to ensure that their suppliers in other countries are not engaging in human rights violations or harming the environment. Its supporters say that it would be easier for businesses within the bloc also to do business inside and, of course, outside the bloc. Now, that's partly because they wouldn't have to be looking at different rules for European countries, say France or Germany, for instance. The current EU rules are voluntary codes of conduct for businesses, and activists say that they haven't been working. The EU supply chain law would change that and make companies liable for violations in areas where their foreign suppliers are doing business. And that could mean that European companies would be more diligent about who they do business with in other countries. Now, of course, that is something that could potentially improve working conditions and environmental protection standards in other regions.
Lastly, how could this law affect businesses in other regions?
Well, one effect, of course, would be raising working conditions and improving environmental standards, as I just mentioned. But critics of the EU law are also warning that this is something that could potentially increase the cost of doing business abroad as well. And that could lead companies to reducing investments in countries where they fear suppliers do not meet the EU standards for human rights or environmental protection. And that could mean that we could potentially see European companies investing less in poorer countries, especially if regulators there aren't in a position to ensure that there are high standards for human rights and environmental protection. So it could potentially hurt economies that may be in more need of investments and benefit those economies that have better regulation and environmental standards and, of course, protection for human rights.
We'll be keeping a close eye on how that develops. Chiponda, let's leave it there. That was Chiponda Chimbelu from Deutsche Welle.